this series on insolvency and bankruptcy and giving me opportunity once again for interacting with all of you with regard to one of the very important aspects with regard to the business closure. Though the objective of this session is to discuss and focus primarily on the voluntary liquidation under the insolvency and bankruptcy code, but I wanted to start the discussion with the overall perspective of the legal framework as on date with regard to the business closure, where we stand in terms of holistic positioning with regard to the options available to a legal entity for closing the business. Because unless we understand 360-degree perspective with regard to any of the subject matter, it becomes very difficult for anyone to give a right advice to the client when the matter comes up for the opportunity or the matter comes up for the discussion. So, if I can break this discussion into two parts, let us evaluate what are the overall options available in the law, whether it is Companies Act or whether it is Insolvency and Bankruptcy Act or Code. So we are aware under the provisions of the Companies Act, the law provides the strike off under section 248, which is a dissolution without winding up. We'll discuss little later, but it is also a dissolution, but it is without winding up. I can also close my company by doing a merger and amalgamation in terms of provisions of section 230, 232 or 233 for that matter, fast track merger, whereby the transferor entity will take its natural death. Third option, which is available to certain circumstances, is under section 271, 272 of a Companies Act. There are some limitations with regard to exercise of option under 271, 272, but as a matter of fact, this option is also available to the company, and one subset of the companies are also eligible for a summary liquidation, which is a kind of fast track liquidation or winding up in terms of the provisions of section 361, where the application is required to be filed before the regional director, and regional director has been empowered in regard to the same. There are different eligibility criteria. There are different parameters. We'll not go much into the detail, but yes, we will have a understanding broadly. Under Insolvency and Bankruptcy Code, there are primarily two options which are available, which are liquidation under section 33, which is not direct, which is having a precondition that CIRP must have been initiated, and as a consequence to its failure or on trigger of certain other events, the dissolution process or the liquidation process will be initiated. And last option comes as a voluntary liquidation under section 59. That is the subject matter for discussion today. Now, as we discussed that each option has its own merits and has its own demerits, has its own eligibility requirement, and has its own process to be followed to complete the particular step. If we talk about the option number 1 under the Companies Act, which is the option of a strike off, as we discussed that this is the process of dissolution, though there is certain right available to certain set of people who may be a member, creditor, or otherwise, to file an appropriate application before the National Company Law Tribunal of appropriate jurisdiction for restoration of this company. Though the company has been dissolved, but section 252 gives the power to National Company Law Tribunal to restore this entity. This is a very unique feature about this particular option, whereas in all other options, the death of a company, which is a dissolution, will be permanent and the company cannot be restored back. If we vaguely and generally talk about the prerequisite, strike off is meant for the entities who are not into business operations. So the first condition is that no business operations have been carried out in the last 2 years. Your balance sheet is nil. You have paid off your creditors, consent of 75% of shareholders by way of a resolution or otherwise has been obtained. Once you test the eligibility and you meet the requirement, you have the option to file an application, and now CPACE has been the designated authority. They will review your application and will proceed for publication of a notification in the official gazette for strike off. There will be a wait period, and after that your company will be striked off pursuant to provisions of section 248. Downside is, though your company is dissolved without winding up, but restoration is possible. Advantage is the process is pretty easy and maybe yes, it is a fast track. As early as 3 months to 6 months time, you can assume that your company will be striked off from your records. Conditions are little cumbersome. We can say that you have to prove that your company has a nil balance sheet and your business operations have not been there for the last 2 years. So if a unit is going concern, has been doing a business, will not be eligible under this option. If your company has lot of liabilities, this option will not be available. If your company has lot of assets, or for that matter reserves for distribution, this option will not be available. So this option has a limitation, and in those limited circumstances, as we discussed, if we are fulfilling the criteria, we will be eligible to take the option forward and we will be able to strike off the company. Option 2, generally no one takes this option for just for the purpose of closure of the transferor entity. But yes, this is one of the option where you have say lot of reserves available, or your for any matter your balance sheet is not meeting the criteria of 248 requirements, prerequisites, and in any case you are on with your restructuring process, you can consider this also as an option because it would not entail any extra cost. And when you are merging three other entities, this fourth entity can also be merged, and by virtue of amalgamation order, that entity will stand dissolved. Scheme will be filed before the National Company Law Tribunal of appropriate jurisdiction. Necessary creditor, shareholder approval and the other formalities will be completed, and once the order is passed, the INC 28 will be filed, and on filing of INC 28, the transferor company will stand dissolved. Or in case of a regional director, the order will be passed by the regional director. Now, next option, which is quite interesting under section 271, 272 of the Companies Act 2013. It is a dissolution after winding up, pursuant to the provisions of section 302. Who can file the application? Company can file the application, or any contributor can file the application. In addition, the registrar of company, central government, state government have also been empowered to file this application. In fact, as per statistics, majority of the cases which have been filed before NCLT under section 271, 272 falls in the category where central government or the registrar of company have initiated the investigation against some company, and consequent to that investigation, the approval has been taken from the competent authority in the Ministry of Corporate Affairs, and an application under 271, 272 has also been initiated for winding up of that company. So majority falls in that category, though if we go with the provisions of section, it says with the special resolution passed by the shareholders, the company can also file that application. Yes, there are few companies, few cases which are pending before various NCLTs for winding up under this particular section. But as I largely mentioned, in majority of the cases, the application, this particular section, especially after insolvency and bankruptcy code, this option seems closed for majority of the cases, not all cases, but in certain cases where you are solvent, you will still have an option to come into this ambit, because the landscape that was changed by the insolvency and bankruptcy code was primarily on the premise that Government of India wanted to preserve the economic value of business. Government was having a firm belief that the business entities which have been created, nurtured over a period of time with the efforts of employees, with the effort of capital, with the effort of banker, with the effort of entrepreneur, should not be killed just for a sake of some insolvency event. An insolvency event was defined as the state of inability to make the payment of legitimate dues of a prescribed threshold. Earlier, this threshold was 1 lakh. Post COVID, the threshold was enhanced to rupees 1 crore. And as of date, that continues. So, any company which has legitimate dues for rupees 1 crore or more and company is unable to make the payment will be considered as insolvent, and any company which is insolvent cannot opt for direct liquidation or dissolution or winding up. It will have no option but to get initiated CIRP process on the instance of Section 7 application by the financial creditor or by the operational creditor or by the corporate debtor itself. All three options, either of the three options can be explored. And once the committee of creditor is constituted, and if committee of creditor firmly believe that nothing can be done at this stage where the company has been brought before them, and it would be prudent and appropriate to decide for dissolution. So even before expiry of the prescribed period of 180 days or 270 days, the committee of creditor can voluntarily decide to move an application before adjudicating authority for dissolution. On that application, the adjudicating authority may pass the necessary order for commencement of the liquidation process. Second option could be that where no resolution plan could be approved within the prescribed framework, maybe it is 180 days or 270 days, and accordingly the adjudicating authority has decided to pass order under section 33 for liquidation of that company. Third, where resolution plan has been approved by the committee of creditor and has been submitted before the adjudicating authority as well, but adjudicating authority on the limited grounds as are permitted and as are permitted in the backdrop of the judicial pronouncements of the apex court with regard to the commercial wisdom and other things, the adjudicating authority can still pass the order for liquidation. Now, fourth option is where the resolution plan approved by adjudicating authority and was put to implementation by the resolution applicant. However, the implementation could not be completed and it got aborted at some point of time. The adjudicating authority will take a cognizance of the sad situation and will pass the order for liquidation. So these are the four instances where adjudicating authority has the power to pass necessary order for commencement of the liquidation proceedings. But the point from where we started was with regard to section 271, 272. So in what situation company can file application on its own? So what comes to my mind is only one situation when the company is filing the application, when you are solvent. So we can say it is an alternative available to section 59 of the Insolvency and Bankruptcy Code. If I am a solvent and meeting the criteria as per section 59 of IB code, I may choose to initiate the process under section 59 of IBC, or alternatively I may choose the option of 271, 272 of winding up. But mind you, if you ask my advice, I will always say that 59 is far better option in terms of everything, including law and including the time frame in which the process can be completed for various reasons. A, in 271, your process of liquidation or winding up will start once you file your application and the application is admitted, allowed by the National Company Law Tribunal. So it may be 3 months, it may be 6 months, it may be 1 year, or it may be 2 years, or it may be 5 years, depending on merits of your case and the position of the adjudicating authority for disposal of that particular matter. The time frame will be decided. On a contrary, in the voluntary liquidation, the best part is that the adjudicating authority comes into picture at the fag end when your entire process of liquidation is completed and the report is submitted before the adjudicating authority for dissolution of a company. So the two processes are entirely different in terms of the timeline and the other legal provisions. In 271, your process itself will not be beginning. It will not see the light of the day unless and until you get a favorable order from the adjudicating authority. Whereas in voluntary liquidation, you make the test of solvency, you meet the requirement of section 59, you pass the board resolution, you take the approval of shareholder, take the consent of insolvency professional for his appointment as a voluntary liquidator, you issue the appointment letter. That's it. Of course, you will be required to file certain forms. And after filing of those particular form, the status of your company will come to under liquidation. And now liquidator will be mandated to complete certain processes. And as early as he can complete those processes, he can prepare a dissolution report and submit it before the adjudicating authority, and adjudicating authority can pass a dissolution order and your company will be closed. So that's how the processes under 271 and 272 and section 59 are way different. On certain grounds on which the registrar of company can invoke, as we were discussing in 271, 272, if a company has been acting against the interest of sovereignty and integrity of India, or the security of the state, or friendly relation with the foreign state, or the public order, decency or morality, then the government will have a ground, and basis that the application can be filed. If a company conduct is fraudulent, this is most common. Majority of the applications have been filed on this particular ground itself. If there is a default in filing the financial statement, that is again a choice of a government whether they want to take that stand or not. And lastly, where it is just and equitable in the view of the adjudicating authority, they can pass the order. If we talk about a summary liquidation process,
Amit,
can
I have one question?
Yes, please, sir.
Yeah. It means in case of company having not working since last 2 years, but having liability of less than 1 crore rupees, can that not be wind up?
Yeah, you can wind up. That's a very good point that Deepak ji has mentioned. The point is that I am not fitting into the eligibility
Criteria,
threshold of insolvency and bankruptcy code. The threshold prescribed is 1 crore and my default is, let's say, 50 lakh. And I am not restricted under insolvency and bankruptcy code from, or I am not eligible under the insolvency and bankruptcy code for CIRP process as well. Do I have an option under section 271, 272? To me, yes, you have an option. When you pass the special resolution and file your application before the adjudicating authority, that is NCLT, and if NCLT admits the same, now proving it to the satisfaction of the adjudicating authority is your challenge. Suppose you have taken a loan from the bank, which is say rupees 50 lakh, and you have defaulted. On what ground the adjudicating authority is going to admit your application without exploring or giving the opportunity to the banker and the other concerned parties? Or maybe there are some guarantees which are personal, without letting the bank invoke those guarantees and explore the possibility of recovery of that money. That remains a question for determination by the adjudicating authority. But theoretically, in my eligibility, whether I can file the application, answer is yes, you can file the application, and if adjudicating authority allows that application, the winding up process may begin. There could be some genuine cases also where you have started the business and your business has failed. And in those cases, and you are not falling in the radar of insolvency and bankruptcy code, so 271 option may be handy, and you are able to prove that this was a bona fide loss to the company due to which company is not able to, and whatever company is having the assets, I don't mind if the liquidator appointed is taking the custody of the same and distributing that as per the requirement of the law. So to me, answer is yes. Practically, I have not seen many of the cases where in such circumstances the application has been allowed. In few cases which are pending, and few of my application are also pending before NCLT under 271, 272 are those cases which have been struck off under section 248 with immovable property having in the name of that struck off company. Now I have two options. One option is that I can go and restore the company and pay the penalty and the additional fee for the odd 20 years or 10 years, whatever is the period of default, and get my company restored. but the cost is going to be very high because 100 rupee per day penalty. Suppose the company was 10 years back.
Yes. Or
Yeah, may I request for muting the mic of the other people? Yeah. So option theoretically could be two. One, I can restore the company in 252 and then I can sell off the property or I can enjoy the property. Or as an option, because 248.8 is very important. 248.8 says that the company which has been wound up, which has been dissolved, the company which has been dissolved pursuant to 248 can also be wound up. That means what? Wound up in terms of the provisions of section 271, though the company has been dissolved in 248, but still I can file the application under 271, 272 to distribute the immovable property which is lying in the books of the struck off company. And there are orders in support to this particular section 248.8 read with 271, 272, basis which many of the assets have been distributed. Advantage is that you don't have to, because in any case you were not interested in running the business operation. So why to pay 20-30 lakh rupees of additional fee and restore the company when I can simpliciter get the liquidator appointed or the company wound up in terms of 271, 272, which has been struck off, and straight I can I can distribute the property or the proceeds. This property will be distributed because either liquidator can sell it off and then distribute, or liquidator can dispose it off in the proportion in which the contributories were holding their stake. So theoretically, Deepak ji, answer to your question is yes, but again we need to explore all those possibilities practically, in which circumstances the 271 option will be practically be available.
But it all depends on your NCLT tribunal, whether they will accept it or not. Because we need to show, because my company is insolvent, it's not solvent company. So that is the main issue. It's less than 1 crore and there is no bank default, it's only employees who are there. So it all depends on the tribunal as per your, I think, conversation. Thank you, sir. Thanks.
Yes. Yeah. All right. Now coming to the one more point, which was regarding fast track liquidation or summary liquidation, which was provided by the government with the objective that that winding up is a long drawn process. Winding up is not a short process. But at the same time, they were conscious of the fact that all companies are not that big, that the entire lot of lengthy process should be followed. B, they were also conscious that NCLTs have been burdened with many of the jurisdictions under Companies Act, under Insolvency Act. So to reduce the burden of the NCLT, they came out with the option of summary liquidation under section 361 with the competent authority and the power being delegated to the regional director of the concerned jurisdiction. So it is an administrative dissolution technically, where you don't go to any judicial forum, but you go to the administrative process for completing your death. Application can be filed by any company or contributory. ROC, central government, state government obviously have the power. Official liquidator has to submit report within 30 days. The conditions which are required to be met to initiate the process under 361, that your book value should not exceed rupees 1 crore. Company which has taken deposit, total deposit should not exceed rupees 25 lakh. Outstanding loan, including secured loan, should not exceed rupees 50 lakh. And turnover is up to rupees 50 crore. Paid up capital should not exceed rupees 1 crore. So these are 5 conditions which are required to be fulfilled. If you meet all these criteria, then you will be eligible to file an application before the regional director, on which the official liquidator will be asked to submit report within 30 days of time. And thereafter, the regional director will proceed with the summary liquidation. Practically, I have not seen many orders, though the process has been in force for the quite some time. I am yet to come across any order under section 361, which is with regard to the summary liquidation. Though the processes have been initiated, couple of our applications have also been filed, but because it was taking a longer period, so we have withdrawn those applications and then we have initiated the alternative process for the same. If anyone has Munishi and Deepakji is there and many other senior professionals are there, maybe someone has got some success with regard to this particular option as well. So I'll be happy to be updated on that particular aspect as well.
Oh, at least we have not been able to get any order on the 361.
So if
in
Munishi has
fact,
not got, then I can guarantee no order has been filed.
not that way, sir. I in fact made an assessment how long it will take. So to be frank, we have not even moved the application after assessing the situation was going to happen. So
we gathered some more courage and we filed the application in the enthusiasm only that perhaps we'll be successful. And as you know, we were advised that there are still processes and certain things to be internally decided by the government, and unless and until, because this is an administrative process, so none of the regional director would be interested in taking it up. So you don't waste your time. You better explore the other options. And
exactly, that's the feedback we had at the very initial stage when we were thinking of using 361 route. So I met couple of officers in regional director office. So they were not even sure करना क्या है. तो प्रैक्टिसली ये है कि गवर्नमेंट अफसर को जब पता होता क्या करना है वो उस काम में भी डिले हो जाता है.
correct.
जब ये पता ही नहीं है करना क्या, then the things you can imagine. So we
And
thought
that
let's not.
confusion perhaps started from the, I think one OM was issued after this notification that government will give some guideline to the regional director because this was first time when the administrative mechanism was created for liquidation process. Prior to this, there was no such experience except to the fact that 248 processes were there, but those were dissolution without winding up. So this was a winding up process, and government has not issued any process. So the regional director and the other officers were waiting for such instruction, and for want of that, perhaps the things could not proceed with.
Yes, yes, yes. Let's hope that some
Yeah.
SOPs come and we are able to use it.
Yeah, it will be useful at least in some of the cases, as Deepak ji was also suggesting that there are certain cases and it can reduce the burden of the other forums where the matters are pending, and at least give an opportunity to the companies to make a legal death of these kind of entities where the situation does not permit them to continue at least.
I think as on date, the government is thinking very fast on these things. They want to free up NCLT from
Correct.
these kind of cases, including compromise cases. So the
Correct.
cases will be shifted to administrative side of the government, that is RD, and above some threshold cases will go back to the High Court. So NCLT would in fact in a way become a dedicated court for the IBC. That's the thinking process as of now.
Correct, 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 correct. That seems to be the right update as on date. Then coming to the next process, I think the liquidation under Section 33, as we discussed the background of insolvency and bankruptcy also, there are 4 instances in which the liquidation can be ordered. And again, I'm repeating that liquidation under insolvency and bankruptcy under Section 33 cannot be directly initiated. It is only when you initiate the corporate insolvency resolution process, and as a consequence thereto, you will experience the possibilities of dissolution liquidation order. A, where committee of creditor with 66% majority during CIRP decides that this company has no possibility of resolution and files the application to adjudicating authority, the adjudicating authority may pass the order for liquidation. Resolution plan approved by COC but rejected by adjudicating authority. Second situation. Third situation, adjudicating authority reject the resolution plan approved by the committee of creditor. And the last situation, resolution plan approved by the adjudicating authority but failed in implementation by the resolution applicant. So all these 4 situations will compulsorily lead to the order of the adjudicating authority for liquidation commencement, and the liquidator will be appointed and he will create the liquidation state, and after realization of the liquidation state, he will be distributing it as per the waterfall mechanism under 53, and the report will be submitted before the adjudicating authority and the dissolution order will be passed. That will also be a death of a company. And now comes the last option, that is a voluntary liquidation under Section 59. This is a dissolution after voluntary liquidation. So it is a liquidation essentially which is leading to a dissolution. So this is a permanent death. Conditions which are required to be fulfilled for commencement of this voluntary liquidation. The first and foremost condition is that a test of solvency. Now, when I am saying the test of solvency, what does that mean? That company must be solvent. That the date on which you decide or you decide to explore the possibility of commencement of voluntary liquidation, you will draw your financial statement. You will make two columns. All asset and liabilities will be put to that table. Book value as well as the realizable value will be put to these two columns. So your assets, book value and its realization value. Your liabilities, book value and your actual payable value. With all netting off, if you have surplus assets after meeting all your liability, that means your company is solvent. And if that is the case, you meet one of the requirement, which is one of the foremost requirement of commencement of voluntary liquidation, and your company can prepare those eligibility documents, which includes the declaration of solvency along with the financial statement, passing of board resolution, and then taking necessary approval from the shareholder, and the process can be commenced for the voluntary liquidation. That's it about this particular aspect. I will now deal with the voluntary liquidation in detail, but till now, if anyone has got any point for consideration, we can certainly discuss and then we can proceed further with regard to, by the time I am sharing the screen, with regard to the presentation. I will share this file only. I'm not handy with the, I'm not able to locate the PPT file. But anyways, I'll discuss it out. The primary reason, one reason that we could understand that company has got 100 crore reserves and want to close the company. Certainly, I cannot go and strike off the company because where my 100 crore will be. In any case, you cannot say that your asset and liabilities are zero. So you will not be eligible for strike off. Certainly, you have an option to merge this company with 100 crore reserve with another company, which will entail the transfer of these reserves into the other company. And the shares will be issued in consideration to the shareholders of the transferor company. That is option one, which is available. The other option that could be available is 271. That is again a very cumbersome process. You will not, anyone would not like to take that lengthy process where your trigger itself is not very clear, because the companies which go into the 271 route are those essentially which are initiated as the instance of the government. 90%, 99% application are at the instance of the government. Only less than 5% application must be which are initiated at the instance of the company or its contributor. So in such situation, definitely you are solvent, you meet all the requirement, and once you initiate the process of voluntary liquidation, the consequence will be that entire 100 crore minus the liquidation expenses and the other creditors which are required to be paid, the reserves can be distributed among the shareholders. And that is what you were intending for. The other reasons could be the special purpose vehicle. You have created a company for a particular project. These are like many of the highway companies, the real estate companies, NHI companies, which are doing a concessionaire project. So 15-year concessionaire project was awarded to one joint venture. And now joint venture has lived up its life. There may be some asset, there may be some liabilities. Obviously, you will be having a solvency in majority of the cases. If you happen to be solvent, then you can explore the possibility of Section 59 and close down the operations by liquidating those assets under the voluntary liquidation. Now, there could be other reason that there is no potential opportunity or your business operations have become infeasible. They are not in viability, right? Your technology has got failed and you are not in a position to upgrade your technology due to XYZ reason. So you can't continue the business. So you have decided to wind up, and if you are solvent, then obviously the voluntary liquidation comes as the first choice. The other option, other reasons could be that as a tax planning measure, the voluntary liquidation can also be used as a tax tool for the purpose of distribution of your reserves. When you decide that you ultimately have to close down the business, of course, it can be fast track. But in addition, if we take the example that if holding company has a capital gain on a sale of its shares in one transaction, and it plan for the liquidation of a loss-making subsidiary or associate to bring the capital losses which can be set off against the capital gain that you have made. So the net effect will be zero. So the gain that you have got on the business transfer agreement or due to any other reason, you may be eligible for the same. If we talk about the conditions are your company must be solvent, that we have discussed the condition of solvency as well. That now we have got couple of cases which we can discuss on a practical aspects also. We have got one wholly owned subsidiary of a foreign entity. The Indian entity has got huge losses and the company was not solvent. But the management was intending to wind up the operations in India in a time-bound manner. The mandate was that we want everything to be wound up and closed in this particular time frame. We tried to explore multiple options, but because 59 eligibility test was not fulfilled, so obviously the 59 was not available as a prima facie option. But the other options, whatever were available that we discussed, we're not guaranteeing any time frame in which we will be able to complete the transaction. So what we discussed with the management and what we suggested, because it is a wholly owned subsidiary, I can always make this company a solvent. Though it will entail infusion of certain funds to meet out the liabilities that the company has, doing some settlement with the parties. So once we arrive the settlement with the parties, we draw down what is the net amount of liability that is required to be paid. We shared the summary sheet to the holding company and requested them to infuse the additional money as a capital, because that is the easiest way to bring in FDI. We issued the shares on the rights basis, and with the infusion of capital, the company became solvent. And rest was the history. We initiated the process of voluntary liquidation, and we could complete that process in the given time frame, whatever was the desire. Of course, it was little costly in the sense that the holding company has to infuse certain part of capital to meet the liability, but that was never the intention that they didn't wanted to pay. Their intention was that we'll pay it off directly from the holding company. None of the person's money will be left unpaid. So in short, the other way, if you would have taken for closure, in the other option, it might have taken a much longer period without any guarantee that this will be closed in this frame of time. So what I'm trying to communicate is, once we have a clarity with regard to the process, perhaps we can evolve on multiple options as long as I am not doing anything wrong. Planning your structuring in a manner that you become eligible to liquidate your company under 59 of IB code, there is nothing wrong. If we are not meeting the criteria, we can always structure it in a manner that we are meeting those criteria, and we complete that process in the time bound manner. That is the point that I wanted to discuss. Another option that we came across, though that transaction is in middle, so I'll not disclose the full detail, but yes, this is a going concern. There is an entity ABC Limited which has got its business, and this is again a entity which is a subsidiary of a foreign entity. They are doing their business, but what is their ask? Due to certain reasons, ABC, they want to change the shell of a entity that does the business. There are multiple reasons for the same. We are not going into those nitty-gritties, but point that I'm trying to make you understand, whether there is a possibility to voluntarily liquidate a going concern on a going concern basis. I see there is nothing in law that stops you, that you can't. I have a undertaking and I will do a business transfer agreement and I will transfer everything lock, stock, barrel to a new entity as a going concern. So essentially, my business has not closed for a day. I will continue to operate the business during the voluntary liquidation process as well. And on completion of the voluntary liquidation process or on the transfer of the business transfer agreement, which are planned to coincide in a manner that there is no interruption in any of the processes. You can achieve even the change of the shell also in a case of a voluntary liquidation. Of course, it will have a implication on the front of a stamp duty and the other taxes, though it is a debatable issue in certain states. We have done some research on that as well with regard to the payment of stamp duty, what could be the option available with regard to saving, if any possibility on that front. But yes, so the point that again I am emphasizing is though it looks very simple that there is not much to evaluate, there is not much to discuss with regard to 59 because it's a one single section and hardly few regulations which are to be dealt by the insolvency professional with regard to the voluntary liquidation process. But there is lot of innovation, there is lot of exploration, there is lot of restructuring which is possible in the case of section 59 of the Insolvency and Bankruptcy Code, which can be used to the advantage of the respective client so that the ultimate objective what he's trying to achieve out of that can be fulfilled. If we talk about the process, I think we'll very briefly and then we will move to the critical aspects. Solvency declaration will be done by the board of director who will file the declaration of solvency in form of affidavit. The affidavit will be stating that they have made full inquiry into the affairs of the company and they have formed opinion that either company has no debt or will be in a position to pay its debt in full from the proceeds of the assets to be sold in liquidation. Now on this point as well, law only says to pay its debt in full. That does not prohibit you from doing the settlement with the creditors. I have an obligation to pay rupees 1 crore and if I settle it out for rupees 50 lakh, there is nothing harm. There is no wrong in doing that. And if I am able to settle it out for 50 lakh, my liability will be rupees 50 lakh and I still can make this declaration that the dues are paid in full. Your dues amount has been reduced from rupees 1 crore rupees to 50 lakh. Second point is very important that this company is not liquidated to defraud any person. If you do some cooking up of your books. And this is a very interesting matter, which I recall a couple of years back. I was sent one financial statement for last, I think, 2 years, where there was nothing much. On the face of it, there was investment in the mutual funds on one hand, and on the other hand, there was a capital. And I think auditor dues were of a nominal amount, some 20,000-25,000. That's it. There was no other amount, there was no other liability which was appearing on the face of the balance sheet, and I was asked to provide a quote for that voluntary liquidation, because the company was solvent. Prima facie, the balance sheet what we got, and the amount which was to be distributed, the amount that they were having in the bank and the mutual fund, was also not much. I think it was less than 50 lakh only. So total 50 lakh was to be distributed. So prima facie, it was looking like it's a very simple case, and there is nothing much to do, and we were about to give a quotation, but prior to that, something clicked to our mind, and we on our own went for doing a diligence exercise. Though the client was not very supportive in that particular manner, he was hell-bent in insisting that you kindly start the process, and rest all the things can be done little later. But we downloaded balance sheet for the last 5 years from the MCA portal, and we did some more research. Basis that, what in net comes to the conclusion, there were huge liabilities outside. This was a real estate company which has taken the advances from the customers over a period of time, which were running into crores. And these advances were written off from their books couple of years back as a well-planned strategy that my books will become cleaner and ultimately I will be able to close this company. When we discussed this matter with the management, of course, because the books were audited and the other aspects with regard to the tax liability and other things were of course taken care of, or they were not liable because of the losses and the other set off which were possible in this particular case. But the point was that, can you write off third party liabilities to that disadvantage? And there comes this particular point, which is 1.4.12, where it says that you have to make a declaration that company is not being liquidated to defraud any person. What looks to our mind was that somewhere something is fishy. By doing the liquidation, he is trying to overcome all his liabilities and bury it out once for all. Because the amount of liabilities, because he was showing the company as solvent, and the amount which was only rupees 50 lakh, so which we suggested multiple methodologies as well for strike off under section 248, And that is the point from where it got a trigger that there is something fishy. Because he was not getting convinced with the option of 248 on one count that the company can be restored back within 20 years of time anytime. So any of the creditor who has no knowledge and no notice today, and also one more fact, the name of the company has undergone change 3 times in the past 5 years. So maybe an address has also undergone a change. So these were the factors which compelled us to decide a policy that we will not undertake any voluntary liquidation unless and until we do a complete due diligence prior to initiating the process.
ना कुक ना कुछ नो बेल्ट
का सदुपयोग करोगे
सूर्य नींद आहे भयंकर.
Anil sir, can you please mute? Yeah, thank you. So the point that I was trying to emphasize was, though it looks very lucrative, though it looks very remunerative, but at the same time, maybe you can say you are not guilty because you are not party to the fraud. You have relied on the affidavit and the financial statement which have been presented before you, and whatever has happened prior to you. But as a prudent professional, can I take away my responsibilities and can I allow such a kind of conduct of a promoter, what he wants to achieve out of that? So that is the reason we insist and we suggest every insolvency professional to undertake a due diligence exercise prior to taking up the assignments with regard to the voluntary liquidation. And I have, I think, got some slide. Let me just share if I can. Yeah, I'll share. So these are few things which we are asking as a initial document, bare minimum basis that we will be able to download many other documents. So a brief note on the industry business, audited financial statement for the last 3 to 5 years, statement of account as on date, solvency statement, list of asset liability with their estimated fair market value, list of creditor, and we have started taking their details as well. As a sample, we test it out and we check it out also whether there are any creditors in existence or not. Any restriction in sale or liquidation of the asset, bank accounts and their signatories, if there are any registration licenses. Now, I'll tell you one more example which we are encountering as of now also, because we have not been able to close that voluntary liquidation because the time when we initiated the process, we were told that though there are matters which are pending before, 2 matters are of sales tax and 1 matter was custom. So in one of the case, I have to receive the money, and in 2 cases there were liabilities and we have gone into appeal before the court. And we were told that this order is already reserved and in no times we will be getting the order. So by the time we initiate the process, the order will be received and we'll be able to file the voluntary liquidation dissolution application in next 6 months to 1 year time. I said, all right. Now this matter of litigation, both 3 matters, two VAT matter and one customs duty matter. Continues before the court despite our best effort for the last 3 years in the court of law. As far as customs matter where we have to recover the money, I have no difficulty perhaps in moving forward, and we can distribute remaining proceeds and we can say this balance money will be distributed afterward, or we can do some arrangement. We have got one judgment also of the Bombay NCLT wherein similar arrangement has been done. But I am worried about two cases of VAT where there is a demand and we have got into appeal because the order is against us for payment. Because of either I deposit that demand and close the matter and then we proceed forward, because the amount is also big, which has a serious impact on the process as well. And interest liability, if comes, then maybe things may change further as well. So we are not able to close the process. Everything else has been done. We have, keeping this provision in mind, we have distributed remaining money, but except for this particular provision and little more money as well, rest of the money has been distributed as well. So history of a litigation is also very important and playing very vital role before we take up the assignment. Assessment of ongoing legal matters is mandatory and is a requirement to be done so that you are able to close that. Licenses in many of the cases may be even the PF surrender, ESI surrender, especially when there is a trust, or these kind of similar other registrations which you have, and if the unit has been operational up till some time, then best would be to settle out all these claims and liabilities maybe prior to commencement of the voluntary liquidation. As a practical tip, I am only suggesting, because management is in a much better position, because you have to prove before the PF authority as to who you are, and then the process will begin. They will start listening to you, whereas management already has a liaison and relationship with them, and they can voluntary surrender, voluntary close. So as a prerequisite checklist, we insist that we should get a shell wherein only bank account is there, or if there are assets we don't mind, or if there are some other which are not difficult to surrender or which are not difficult to cancel, things where human involvement will be there, should be taken up separately prior to the commencement of the voluntary liquidation process. Income tax assessment, though the provisions of section 178 with regard to obtaining the no objection certificate from the income tax department are no longer mandatory. It does not come as a bar that you cannot distribute the proceeds. You can proceed with, but at the end of the day, when you file the dissolution application, the adjudicating authorities are insisting on producing those no objection certificate. So ultimately, time and again, you will be coming back to the back square one situation where if you have not obtained, so as a matter of caution, we have been insisting in all these cases where even we have started with new cases also, we are writing down to income tax officer and we are pursuing that matter with the concerned income tax officer also for the purpose of issuance of the NOCs, and wherever demands are there or wherever assessments are pending, if we don't have a very clean history of the past. So we advise them best is to wait for a year time when you can settle down your assessment and other things which are pending, the things which you are not able to close down in the last 5 years, and you are expecting the voluntary liquidator to come and close down that thing in the next 6 months of time, is not going to happen, is only going to put a burden on you, and you will be running from pillar to post to get that matter closed. And unless and until these proceedings are closed or demand orders are closed, you will not be able to file a dissolution report, and the process will not be terminated. Employee workman dues, show cause notices are very important. As a surprise in many of the matters they can come.
Amitji, can I ask one question here?
Please, sir.
Yeah. So, in voluntary liquidation matter, what we are discussing just now, when we commenced this voluntary liquidation process, there was sufficient amount in the bank or cash in hand, cash in bank, that they could give the solvency document that sufficient funds are there to discharge their liabilities. Now, suddenly, after commencement of this voluntary liquidation, some legal cases have come up, and where the liability may be much more than what is available with the company. We, as a voluntary liquidator, then how do we proceed with this? Such cases,
Simple,
practically.
simple option is if you determine that these liabilities are going to make your company insolvent, right? They are determinable liabilities, like the legal cases which have been, because the situation maybe the legal matter has been filed before the court, right? Secondly, the legal matter has yet to be filed before the court, but you are now notice served, right? If that is the case, if the liability is crystallized and you are sure that the amount if paid will make your company insolvent,
Yes, that is a situation. Then
that is
what?
the situation, then without wait you should move an application to the adjudicating authority saying that we have been appointed as a voluntary liquidator in this matter in so and so manner. Now, because this situation has arisen and there was no wrong statement, right, from, because the court will ask that from where this new liability has arisen. So you will say that, or you will be having a reply to say that that these were not at the time when the liquidation commenced, but these were developed subsequently. But the declaration that the management is giving with regard to the liabilities, with regard to the asset, that somewhere becomes faulty. Either their financial statements have not made a provision, but be it as it may be, I'm not going into too much of the nuances. Point is that you need to make an application before the adjudicating authority, making your pleadings for making you free from the voluntary liquidation work and let the company be restored back to active and as a going concern. That is the way. And then and I think there are a couple of precedences also. If you want, I will share you a couple of orders as well where similar situation has arisen in those matters, and with the leave, because maybe professionals have the alternative view also that without leave of the court I can abort the process because shareholders have appointed me, and I can go back to shareholders, and shareholders can pass a resolution superseding to the previous resolution, and they can terminate my appointment. I am of the view that this process is not reversible. This can be terminated and aborted only with the leave of the court. adjudicating authority, though may not be in session today in your matter because you have not preferred the application, but IB court gives the mechanism by which you can file the application before the adjudicating authority for seeking leave for abortion of this particular process. That is the view that I am having. If anyone else has got any
So
other,
in this connection only, do we have some other solution? One solution you have given that yes, we should go to the NCLT and then ask for their
I have
permission.
another solution also,
Yeah,
Anilji.
please.
The other solution is you will have to discuss it out with the management
Yeah,
with regard to making that company solvent. Suppose there is a liability of rupees 50 lakh, which is expected to arise from the legal case,
yeah,
right? Now, management is saying, ki, all right, Anilji, don't worry. We are conscious of this situation. We will fund this gap and your company will still remain solvent. You please proceed with, and we will file necessary declaration revising our financial statement, or in what manner I will be able to make this remain this company solvent, or maybe the liability which comes will be settled down between the promoter and the person to whom the liability has to be paid, so that does not affect the solvency of the company. That could be the other alternate. So you have to remain the company as a solvent. How you will achieve, you could be having a multiple option depending on the quantum and depending on the situation. Either you take a leave or you make the company solvent. I think these two things which comes to my mind.
thank you. Thank you.
Maybe I think there are few senior professionals as well. Maybe we can benefit from their experience as well. If anyone has got a similar situation and they have worked out on some other solution as well. Deepak ji, Munish ji, if anything comes to your mind, what?
Not on the question raised by Anil ji, but under your point number 17, any other material documents and information.
Hmm.
So if you allow me, I want to add something here.
Please, sir, please.
Okay. So when you're taking up an assignment, please assess if there are any foreign shareholders, and if yes, very meticulously check that all FCGPR or FCTRS and FIRC are in place. They are reported to the RBI, and there are proper documentation related to FEMA. There are cases where IPs have completed their 59 completely. When they go to bank for distribution of proceeds or dividend, whatever you call it, they are stuck up. They are stuck up for years together. So please take care when you start an assignment. Be very particular on checking your FEMA requirements, how the money has moved in and moved out. That's it. Thank you, Amit ji.
Yeah. Thank you, Munishi. Very vital point, and sorry I missed out, but thanks, Munishi, who has pointed it out. Yes, very critical one, and even the compliances with regard to the withholding taxes when you remit the money are required to be ensured, because the tax authorities at the time of remittance will also ask, and otherwise also you will be required to do necessary compliances with regard to the same when it will come to uh, completing the entire process. Next, I was sharing the screen. So as far as this was just a process with regard to means few things which practically we are doing, and we thought we will just share it out to you how we can reduce our liabilities with regard to the surprises what can come, and how we can run the process so that it is smooth, it is not doing lot of hiccups in between. So we have process-wise declaration we have completed. resolution, special resolution for voluntary liquidation and appointment under 59(3), you will be completing, right? Approval by creditor. This is also very one small point, although. So if your list of creditor has some persons, so in addition to the shareholders, you also require 2/3 in value the consent from these creditors, so that your voluntary liquidation process can begin. You will be making a notification to IBBI. Now everything is online. Those people who have completed any voluntary liquidation or initiated any voluntary liquidation recently, they'll come to know now. Earlier, voluntary liquidation reporting was through some Excel Google sheet or Excel sheet or Google sheet. You will get a message in your email ID, and you will be asked to provide the information by end of the day or by end of the next day. Now they have streamlined the reporting process as well, and you will be getting a form template available in your login ID in IBBI portal, and you will be able to fill out, you will be required to fill out all your information as well. And the advertisement which is published on the IBBI portal is also through this particular form only. Once your assignment is approved, you will be able to upload it on the IBBI portal, and IBBI portal will automatically publish it out on the IBBI portal. And that's how, once it is approved, then the status of the company will also change from active to liquidation. So public announcement will be made within 5 days, asking the stakeholder to file their claim. The claims will be submitted, and after submission of the claim, you will be doing the verification of those claims, and you will be preparing the list of all stakeholders. Preliminary report is required to be filed. Please don't miss out as far as the filing of the preliminary report is concerned. Assets realization is required to be done as per the timeline, whatever is available to you, and depending whether there is any perishable asset or not, and basis that you will be completing that process, and you will be depositing the proceed in the bank account. One more point which is of caution, that you have to initiate the process for changing the bank account, right? There may be a current bank account or a cash credit limit bank account or whatever it is. You may close that bank account and you may open a voluntary liquidation account, maybe with the same bank or maybe with the new bank. This is a little cumbersome process, because my experience says that whenever you reach out to any bank, especially the nationalized bank, they will insist you on the order of the NCLT, because they are aware only about one liquidation, that is under 33. So howsoever effort, best effort you make, you will keep on arguing that this is not the liquidation under 33, so no court order is available. But they will again and again insist you to provide. You will provide the appointment letter, you will provide the special resolution, you will provide the other documents, but your account opening process will not be completed for want of this particular information. So you have to take it up on priority. As soon as your appointment is done, you may visit to the concerned bank branch and apprise him about the voluntary liquidation process. In short, you have to guide him and educate him with regard to 59. You may have to take the books to him and make him understand. Maybe he has to reach out to his head office, because majority of the head office legal team is now apprised of what is the voluntary liquidation process, and this process does not require any order from the NCLT. That is where many of the matters have been. In one of the matter, I still remember in early days, it took me 1 year time to get my account opened. I think more than that, to get the account opened in the name of the voluntary liquidation. And he was again and again insisting on the order of the NCLT. Fortunately, with the intervention of the legal team of the head office, we were able to complete that. Distribution is a little tricky matter because as Munishji was also mentioning, and you need to assess whether foreign shareholders are involved, what is the net amount that you will be eligible to remit, FCGPR, previous filings, approval, and all that will be playing a very decisive role in doing that. So day one, when you, maybe we generally insist that we complete the basic diligence as to doability and the nuances, and basis that you give the quotation as to what will be the involvement and how we will be able to maneuver this particular exercise. Now we will be doing the distribution of,
Amitji,
yeah,
since you have moved in your process chart, so
yeah,
there is a Bordeaux portion at the very initial stage when you start the process. So there's a case, not one but two cases at NCLT Mumbai, where
yes, sir.
two of our colleagues are in trouble and they have closed the process. The resolution application is at hearing stage. See, when the process starts, company is required to do two filings. One is a GNL2 and one is MGT 14.
Correct,
Now, in both cases, the companies have filed GNL2, but they have not filed MGT 14.
correct,
So, for almost now more than 6 months, that NCLC is insisting on to IP where the MGT 14. Another company management, everyone has almost now vanished. It's an MNC, there were employees, they have left and what, blah, blah, blah. So he's not able to get an MGT 14 filed now. So IPs would be well advised to ensure this thing also that GNL2 is filed, MGT 14 is filed, and there's proper intimation to IBBA from the company side. That is just
absolutely. What
small.
Munishji has mentioned is very valid point, and just a point of caution. I will also give one more point. I just now realized that the MCA system is designed in such a manner. Once you file GNL form for commencement of the voluntary liquidation, your company status will change. So in Seratum also, in filing, we file MGT 14 first and then we file GNL.
Exactly.
So that,
Yes.
so that we are not stuck in any process. Now, in a due diligence, this is one of the point of due diligence that we insist to ensure that there is no past filing which is left out. So say for 31st March 2025, AOC 4 and MGT 7 are required to be filed. We are sitting in the month of November. We assume that AGM happened on 30th of September 2025 and balance sheet and annual return have still not been able to file. And the voluntary liquidation process has commenced with the appointment of voluntary liquidator on 31st of October 2025. And if we file GNL2, maybe MGT 14 also filed. Once GNL2 form is filed, AOC 4 form and MGT 7, or for that matter, any other form cannot be filed. So whatever defect remains will become permanent defect and you will not be able to cure it out. A. B. Even your management power. Management means directors. The board will become functus officio. The board will not be having any power. All powers will be vested in the voluntary liquidator. In what capacity he'll be doing that, even if he want. So a system will not allow you to file any of these kind of forms. So As a matter of checklist, this is very relevant what Munishji has mentioned, a point of caution on the point of MGT 14 and GNL 2. And prior to that, at least for the last 5 years, whatever important and relevant document, statutory documents are required to be filed, maybe DIR 12, maybe there are some directors whose secession form was required to be filed. Once the process is initiated, you can't, the director's signature will become invalid. You cannot use that signature. So it is not the case that today let us, because every management is in a hurry. He want to initiate the process immediately. So maybe you can initiate the process immediately, but you will have to do it at your own risk. Maybe the due diligence process may take a week time, but it is worth to take a week's time pause to check all the document and ask the consultant who is making compliances for that particular company to ensure that everything is in order, right? That everything is filed. Otherwise, you may end up these kind of difficulties as Minister was indicating with regard to the particular process. Yeah. So let me just share back. Income tax, TDS, all that has to be kept in mind. Sorry, these timelines are old. As I mentioned, now this is not current presentation. This is not able to relocate. But after that, you will be filing your dissolution report with the adjudicating authority. And adjudicating authority on, they will ask, they have a prescribed template with regard to the timeline wherein you will be required to fill in as to when your appointment was done, when you did publication, all these action point what we are discussing in the checklist. So you will fill out those details along with the relevant pages and annexure in the application form for the dissolution. Invariably, the notice is given to the registrar of company, and many cases we have seen the, if the NOC is not there, the notice is given even to income tax department also for their report, or there is a standing counsel from the income tax who will take it forward, either file affidavit or will say that they have no objection, and basis that your company will go for final dissolution. In between, if you cross the timeline and you are required to hold the meeting of contributories, you will be holding the meeting of contributories, filing necessary report, and final report will be prepared thereafter, and thereafter the application will be submitted, and then the dissolution order will be submitted. And last but not the least is the preservation of record. Whatever records you have prepared with regard to the company that you have liquidated, in terms of the provisions of regulation 8 and 10, 8 years is the time prescribed for the purpose of maintenance of these records. I can continue to maintain the records for 8 year or 80 year what we have in possession. What about the records of the corporate debtor? This, I have a question to Muniji as well, to how to interpret this provision with regard to the obligation for maintenance of record. Are we talking about maintenance of record with regard to the voluntary liquidation process, or we are talking about the books of accounts and books and records of the company that is voluntarily liquidated also? And if yes, then what is the mechanism and what is the methodology that insolvency professionals are following in this regard for my guidance and my understanding and the benefit of others as well, I would like to take benefit of his presence. मुनीष सर, क्या करते हैं हम लोग अभी?
सर देखिए क्या करते हैं और क्या लॉ की पोजीशन है.
हाँ.
When in initial cases we have sought records from companies, even company law records also, and some tax records also. The very first case that we did in 2017. But then slowly we realized that we are only required to maintain records of the process. And we are not in fact required to maintain records of taxation or companies act. The reason being is there is a purpose in maintaining the reports under Companies Act and Income Tax Act or some other act that we do is the departments have access to your records if they want to do some investigations, inspections, or there are some other cases that are pending against you. But once you liquidate a company, wind it up through a process of the court or NCLT, so there is a presumption that all your liabilities have been met out. Now there is nothing that is going to take initiated against company. So those records can be disposed of. So what we have started doing is we make a prayer to the NCLT in our dissolution application. Can kindly allow us to destroy or dispose of the records maintained under various acts of the which have been maintained by the corporate debtor.
Okay.
Yeah, that's what we have started doing in last 2-3 applications.
And court is allowing that prayer also.
Court is allowing my application and saying that company stand dissolved with effect of this date. So we assume that they have also allowed us disposition of the case. Otherwise, also I can always go back and say, see, my duty was to maintain records under liquidation and not old records.
Munish sir, why this confusion? Because I think you were also attending that round table discussion wherein which was organized by IBBI, wherein on this particular record maintenance as well. I think about 1.5 or 2 years back when NESL started providing the bandwidth for storing the data in their portal through online mechanism, right? Since that particular time, I think there was some consultation interaction between, and therein we discussed this point, and what IBBI persons who were present in that meeting categorically stated that the intent of law is to preserve everything for 8 years, including whatever process you have run. So obviously that is also your liability, but because after company is put to voluntary liquidation, there is no management and there is nothing, so they may not be held liable for the same, and we expect the insolvency professional to take care of that particular responsibility. I don't know how to, I tried to understand little further also, but the clarity what came to me, or maybe I have misunderstood, what came to me was like that. But though it is an onerous responsibility, means as you know, there could be a variety, because I have never been given a handover with regard to all these books and papers and records. B, that was not my concern, because that is not stopping me, or that is not obligating me for completing any process for that purpose. And how to, means so far nothing has came forward, but I'm just little concerned about, at least maybe if not for the past process whatever we have done, but at least for the new processes which we are currently undergoing, and wherever we can rectify the position, can we do something, or can we understand or seek some better clarity from the regulator, or how to take it up, or what the other peoples are doing also is a question, because there are many other senior professionals also who have joined this discussion, because that is one question that keep hunting me, because though what you have mentioned is one part to it, and I understand that is what we are reasonably able to do, that much is in our control. But if the ask is tomorrow, all of a sudden surprise comes that no, our ask was this much, then I think the situation may be little difficult.
Okay, that couple of things.
Yeah.
One is what can be done. So in two of my cases, they were MNCs and they wanted the recourse to be maintained for prescribed period of time, 8 years. So what we have done is that we have hired services of some document storage wala, which is very common. You can take it. Paid him advance for 10 years and shifted records there. And he maintained those records for 10 years from the commencement of voluntary liquidation SR passing date. But the law mandates you to maintain for 8 years from the dissolution. So you do not know when the dissolution will take place. So we assume the maximum time it will take is 2 years. So the case has already taken 5 years. It's a different story. And my application is still pending. Secondly, as far as view of IBBI is concerned, I respectfully disagreed then and I disagree now. On two counts. One, when IBBI says that board or management is out, I don't agree. Board or management is out in liquidations and not in voluntary liquidation. So voluntary liquidation by very nature is a reversible process. Even before IBY came out with borders of reversing the process, it was a reversible process. It's something voluntarily. I can always take a step back and say, we are not dissolving now. Any situation can arise, one Anilji mentioned. If you don't find a situation to solvency, what you do? You have to reverse the process. So board does not go out. In fact, when we pass board lessons and SRs at the time of commencement, we reserve lot many powers to the board. There is a long list we give their exceptions for the thing the board will remain in control and they can do these things. So, and we have been filing those resolutions with IBY also and MC also. Nobody told us why these powers are reserved. The same has also, in fact, gone to NCLT also, where we reserve this thing. Two, when they say the intent of the law is that we maintain records for 8 years, now that comes from somewhere that a mindset that IBBI carries towards IPs is that you can tell them and to do anything. The intent of law should come from the law and not from the mouth of IBBI officers. There is nothing in law that indicates that I am required to maintain all records for 8 years. If that be the case, and if IBI comes out something in writing, then I think IP will be well advised to talk to their CDs, kindly
I
make
think,
an arrangement with document
yeah,
service providers and store the documents there. You can't keep them in your office. Not possible.
yeah, absolutely. I agree. A point is that I think clarity on any matter is anytime advisable and better. ICSI, IIP may, or along with the other IIPs, may take a lead to flag all these open areas and get a clarity, means whatever, as you suggested that in two of your cases which were foreign multinational companies, and they insisted that we have to maintain a record, so you have find out a via. We also don't mind in creating that via and mechanism for creating that record and maintaining it for a period of 8 years, and especially when it is a voluntary liquidation, unlikely, unless there is some fraud or something, it is unlikely that anything will come up, so we are ready to maintain that. But whatever is required inadvertently tomorrow, if somebody is penalized for this cause, I think that will be very sad to the situation. So my request to ICSI also is to jot down these points and take a note of the same, and whatever issues are with regard to practical difficulties or on which the clarification is required, at least we can put it before the government, and let us hope that some clarity can come from that side. One point,
Yeah,
yeah,
Amit,
yeah,
if can I come in?
please.
Yeah, so this was regarding the point we are just discussing about the preservation of the record.
Huh,
So, and we were stuck whether what is the letter and what is the spirit.
correct.
Okay. So now wherever the such situation, I am of the opinion we should go logically. Now, for the sake of argument, if some company is there, 50-year-old company, does IBBI expect us to record 50 years record? And they say all kinds of record. Then it may be voucher also.
No, Anil sir, 50-year is not a requirement in any law. Even if I am a going concern, I am required to maintain the record in majority of the cases for 8 years, even for the books of account and the records, right? Except the permanent record, which are like your minute book and the statutory register. Company law record are maintained for the lifetime. Rest everything is maintained for the 8 years. So for
Absolute.
company also, it is not permanent, right?
Exactly. Coming to that point only. So all those records, say it's a 50 years old company, and all the records which are statutorily to be recorded permanently, does it mean I have to maintain it for next 5 years or 8 years as the law requires? It's not logical. One. So I am of the opinion, and this is what I am practicing, that the records in my tenure, the date of commencement of voluntary liquidation till dissolution, I am responsible. Before that, it's a management which is responsible, and at the most we can have undertaking or have an arrangement. Yes, they give us in writing that they are having it either physical copy and or virtual copies record, and a record of that I also have it. So that again I'll go back, what is the purpose is if anything happens in near future, say next 10 years or 12 years or 15 years, whatever the time it is required. Okay. One is that 8 years period after the closure of the company, and that since the commencement till closure, so say this total period comes out to be 12 years. Okay, 8 plus 4. So then we have to means supposed to maintain the record for the since commencement till closure plus 8 years, not the earlier record. I am of the opinion that I'll again re-emphasize that the period for which we are responsible from the commencement, we should be made responsible. Now, IBBI, again, if they are so convinced that yes, all the record, why don't they issue the clarification in that respect?
I agree. I agree. Completely I agree. Means I am with you, and I also have the similar views, but I'm because we have a forum where we have got some senior professionals. So I thought I'll take a liberty to take the views of everyone so that we are enriched with the knowledge of each other. And if we are required to correct our practices, we should initiate, or if we are required to seek any clarification. Your point is absolutely bang on and valid. If the view of the department is so very clear that they expect the records to be maintained for, so it's a pretty long period from 2016 December. We are now in December of 2025. So a kind of clarification will be definitely be helpful for all of us. I completely agree.
Thank you.
So we have to discuss one more aspect. I think that we have not covered yet. That is the taxation aspect to the voluntary liquidation. Now, in taxation, invariably there could be a situation that you will be either selling the asset during the liquidation process, or you will be distributing the amount on liquidation, or maybe both. There may be some amount which may be forming part of the accumulated reserve, or there may be some amount which may not be part of the accumulated reserve. So your distribution essentially can be taxed in 222C as a dividend when any distribution is made by company to a shareholder to the extent it is attributable to accumulated profits. It will be a deemed dividend and will be taxed in the hand of the recipient. However, in terms of the income tax provision, section 194, the TDS obligation at the rate of 10% will be applicable. Or in the case where you are doing the foreign remittances, the withholding tax requirement will come into picture. Second point, with regard to the capital gain. Distribution of any assets to shareholders on liquidation shall not be regarded as transfer. And any money or assets which are received by shareholder will be charged under the head capital gain as reduced by the deemed dividend. 178 we have already discussed. There was a provision, but now there is as such no provision with regard to the same. So no mandatory requirement as far as the taxation is concerned. This is the finer position with regard to the taxes in the voluntary liquidation as of now. I think we have broadly we have discussed various aspects, but I'll be happy to take the questions as well, and maybe we can discuss the finer nuances from the participants with their experiences, because everyone has done some voluntary liquidation and each case, I understand, brings some new experience, and we can, by sharing the experience, we can enrich the others as well. So maybe we can unmute and discuss those situations as well, and we can educate each other.
Can we complete, sir?
No. Question answer.
Okay.
Maybe we can check if there is anything. Then
Sure, sir.
I don't think there are any questions coming up.
Amit ji, hello. हेलो,
दीपक जी।
गुड इवनिंग अमित जी। मेरा क्वेश्चन नहीं है, बट बेसिकली जो
जब
समरी
अमित
प्रोसीडिंग
जी
की हम बात
अमित
कर,
जी
हेलो,
अमित जी नहीं बोल रहे, मैं बोल रहा हूँ मनीष।
अच्छा सुनिए, आप मेरा जो समरी प्रोसीडिंग की हम पीछे बात कर रहे थे ना वाइंडिंग अप में,
सॉरी सर, वो एक कॉल आ गया था जी, बताइए दीपक जी।
जो समरी प्रोसीडिंग आरडी लेवल पे जाती है सर, आपसे मैं चलिए एक छोटा सा उसमें है, कोई क्वेश्चन नहीं है इसमें, मतलब बहुत टाइम कंज्यूमिंग प्रोसेस है, जो मैंने अभी मेरा तो एक मैटर 4 साल हो गए, 3 साल से चल रहा है, तो
हो
इसको
गया जी,
कैसे
हो गया।
एक्सेलरेट कर सकते हैं? मतलब समरी का नाम रह गया तो लॉन्ग टर्म हो गया सर ये तो।
मैं आपको अपना एक्सपीरियंस बता रहा था। आई थिंक मुनीष जी डिड ओनली एक्सप्लोर्ड द पॉसिबिलिटी। आई started the process and then withdrew, and you are the one who has been following for the last 4 years, so you are
नहीं, उसमें
most
कुछ
senior.
अपने आप अपनी तरफ से कुछ कोई गवर्नमेंट को देनी रिप्रेजेंटेशन भी इस समरी नहीं हो रही, तो उस पे कुछ
सर
मतलब, हाँ
जैसा मुनीष जी कह रहे हैं ना, देखो
हाँ
मुझे
हाँ।
क्या लगता है कि ये अप्रोप्रिएट टाइम है। गवर्नमेंट खुद वर्कआउट कर रही है, बट आई थिंक देयर आर सो मेनी थिंग्स एंड सो मेनी processes which are going on simultaneously. Maybe they are not able to focus because शायद ये लिक्विडेशन का प्रोसेस है, उसको लगता है कि ये बाद में कर सकते हैं। बट इफ somebody can push it, डेफिनेटली इट कैन यील्ड अ वेरी बेनिफिशियल रिजल्ट। मुझे नहीं मालूम कि ये नंबर कितने होंगे इस पली प्रोसेस के अंदर 361 के अंदर जो आएंगे, बट इफ somebody कैन एज ए इंस्टीट्यूट लेवल somebody कैन पुल आउट द डेटा कि टोटल कंट्री के अंदर इतनी कंपनीज एलिजिबल होंगी इस 361 के प्रोसेस में, अगर 361 का प्रोसेस स्ट्रीमलाइन कर दिया जाए, and this will be the reduction in the burden of the NCLT.
एनसीएलटी, यस यस, दैट इज माय पॉइंट।
So if that happens, I think then this process, because the administrative hassle में रुका हुआ है, somebody was expected to bring a process note for clarity to all the regional director. Unfortunately वो हो नहीं पाया आज तक। इसकी वजह से मतलब मुझे नहीं मालूम कि आपका मैटर किस आरडी के पास में है, नॉर्थ में है या किसी और रीजन में है। बट जो हमको इनफॉर्मल एडवाइस मिली थी वो यही थी कि बेस्ट इज, बिकॉज ये प्रोसेस अभी आया नहीं है, यू विल बी वेस्टिंग योर टाइम एंड एनर्जी, यू बेटर गो टू द अदर ऑल्टरनेटिव प्रोसेस एंड कंप्लीट देयर। इधर इतनी जल्दी होने वाला नहीं है, जब तक आएगा नहीं तब तक कोई भी एडमिनिस्ट्रेटिव प्रोसेस करेगा नहीं इसका। दैट इज वेयर वी आर स्टक।
हाँ, आई थिंक दिस आर ओनली मेनली रीजन, जैसे
बट आप
एडमिनिस्ट्रेटिव
अगर 4 साल आपने वेट किया है तो आपको मुझे लगता है कि मतलब
अब
एफर्ट।
क्लाइंट डजंट वांट टू विड्रॉ एंड गो टू एनसीएलटी एंड ऑल दैट ना, तो कहता ठीक है पेंडिंग रहना दो, अब क्या, ठीक है, वी
हाँ
हैव
मे
फाइल्ड द
बी, मतलब
एप्लीकेशन।
द
हाँ
सेंसिबल मूव मे बी
हाँ।
यू कैन रिक्वेस्ट टू द ICSI people also to do some database research and then
हम्म।
make a representation along with the other representations which are going time and again to sensitize them कि भाई this is also one thing which is pending for the quite long time, and they may have access to all applications which are pending so far before the different regional director. I think basis that ministry can take a call and they can issue necessary guidance for the purpose. I think that is the only way that comes to my mind. But yes, it will be very helpful, and even the scope can be further increased, right? As the fast track merger cases, if you recall, 233 process was very having a very small criteria when it was introduced. Whereas today, if you see with the recent amendment, the process has been enhanced, right? It can be even listed entities are brought into the purview. So I am saying ki if the administrative process can be streamlined, tomorrow even the summary liquidation proceeding can be expanded, except in those cases where the fraud is involved, where NCLT jurisdiction is mandatory to be brought into picture. Rest in all cases, I think summary liquidation process can be completed.
Even sir, even fast track merger also, there is a condition na that
That's
90% we are moving to the then NCLT, there's no option.
correct. Especially in
Consent
case
of
of a
ROC, the shareholders and creditors in number and in value, both,
correct. That's a problem. I think We had met to regional director office also in this connection, in west also and in the north also. And we have got that it's a very clear direction, it's a position in the law, so we cannot dilute that. So nobody has taken that diluted position with regard to the same. I think I have got one matter, if I am not wrong, it was Andrew Yule, which is a government company. In respect of that, I think they have taken a lenient position, but I think that is the only exception. Otherwise, I have not found any exception in 233 as well. But let's hope. I think maybe.
I think we're hoping that a new company, the amendment is coming. I think bill will be very soon introduced to the parliament.
Yes, yes.
In
In
that,
winter
they are,
session, it is coming.
yeah, they are relaxing this condition basically, which I've heard from the ministry. Let's see what
Yeah,
happens.
that's very positive news if government has understood that they will be putting it at parity with the 230, 230.
Yes, same.
That would be, then that would be a very, then the real advantage will be then only.
Yes.
233 real advantage will come in those situations. And I am
Yes.
saying on the similar lines, when you have now well settled administrative process for the fast track merger, a similar structure can be there for the liquidation
RD level, right?
summary.
Yes. Yeah.
I think that will be really helpful for the community as a whole, that the administrative burden of the adjudicating authority will be reduced to large.
Thank you. Thanks for your time.
All right, sir. All right. Any other point that anyone wants to make a mention or anything that Munishi, any further
सर बस
guidance
नहीं
that
सर, आपको सुन लिया, सब डाउट क्लियर हो गए.
you're looking as usual, as smart as always? You are on mute, sir.
मैं वीडियो बंद कर दूं फिर.
Anjali, can we close the session? I think.
Yes, sir. If there are no questions, then we can close it.
Thank you. Thank you.
Thank you very much, sir, for such a knowledgeable and interactive session. Sir, you are requested to please share the presentation of the topic.
I will share the actual PPT,
Yes, sir.
which I could not get on this PC. I will share it separately.
Sure, sir.
All right, I will do.
Thank you, Vijay. Thanks a lot for giving wonderful lecture.
Thank you, sir.
अटेंडेंस सर्टिफिकेट आज ही शेयर कर देंगे.
थैंक यू अमित जी, थैंक यू.
Thank you.
By Monday, it will be shared.
Okay, man.